Hi there, welcome to NEP Invest. About 18 months ago, I had my first look at a company called FINEOS. This was, at the time, a little bit of a cult stock on the ASX. A lot of fund managers really like this company. And in fact, the valuation back then was approaching $1 billion, even though this company wasn't profitable. Now, times have changed in the fact that the market is now looking for profitable companies. And FINEOS, even though it wasn't profitable back then, it is on the path to not only becoming profitable, but also free cash flow positive. And that path to profitability has meant the valuation of this company has remained at fairly elevated levels. So we haven't seen a significant sell-off in this company's valuation, unlike many other companies, many other tech companies, many other unprofitable tech companies, not only on the ASX, but also on overseas markets. So what exactly does FINEOS do? I'll probably call this company a software solutions company for the insurance industry. In fact, 7 of the 10 largest group life and health carriers in the US are FINEOS customers. The FINEOS platform provides full end-to-end core administration for group, voluntary, and absence employee benefits across the global life, accident, and health industry. The FINEOS platform includes FINEOS Admin Suite, core product suite, as well as add-on products, FINEOS Engage to support digital management, and FINEOS Insight for analytics and reporting. The CEO, executive director, and founder of FINEOS is Michael Kelly, and he has extensive experience, 3 decades of experience in this field. Although that makes sense because this company was founded in 1993, which was 30 years ago. So he is actually from Ireland. He did spend a little bit of time in Australia. And the only thing I should mention is FINEOS is an Irish-based company. And Michael Kelly was the previous winner of the EY Ireland Technology Entrepreneur of the Year. And in 2015 was named as one of the top 10 most influential executives in the Irish international fintech sector. As I've already mentioned, FINEOS was founded in 1993 in Ireland. And so it's been around for a while, 30 years. And it listed on the ASX the 16th of August, 2019. Probably my biggest question about FINEOS is why did they list on the ASX? Maybe they saw more opportunities on the ASX. Maybe because Michael Kelly did spend a little bit of time in Australia and he just liked the ASX. Who knows? But that is probably a question I do have moving forward when it comes to this company. The large shareholder of FINEOS is Jekyll Investment, and this is a company or super that is controlled by the CEO and founder Michael Kelly. So definite skin in the game because Jekyll Investment owns 52.5% of the company. And this is one of the attractive things about FINEOS is that skin in the game. Michael Kelly, this is like Michael Kelly's whole life. For 30 years, he has been in this company and he wants to see this company succeed because it is his life. Second largest shareholder is ECP Asset Management with 7% of the company. Now, the last time I did a video on FINEOS was back in February 2022. So we'll call that 18 months ago. At that point in time, the share price was $2.38, which means the market cap was $760 million. The market cap has been higher than that in the past. In fact, when the share price did reach its high, the market cap of FINEOS was over $1 billion. Now, when I set up this video at the start of June of 2023, share price was $1.79, which wasn't that much lower than February 2022. So the share price of this company hasn't fallen all that much, although the share price did reach a low of something like $1.20. Now, on June the 29th, when I'm recording this video, the share price has rebounded back up to $2.20, so much closer to the share price it was back in February 2022. And I think that lack of significant decrease in the share price over the past 18 months is a testament that the market believes this company can be highly profitable in the future. And that's why the market cap of this company is still hovering around about $600 to $700 million. And the ticker code of this company is FCL. Another thing to really like about this company is just the amount of direct transactions we have seen over the past 1 year. This is almost going back 1 year ago. And we've just seen a continual buying of shares on market from not only Michael Kelly, but also some of the other directors, but chiefly Michael Kelly. He keeps on buying shares. In fact, the largest on-market trade here was in March when the share price was down around $1.32, and he bought over $1 million worth of shares. So this actually does give me confidence that the management and the founder and CEO of this company are pretty confident about the future success of FINEOS. The main motivation for me doing this particular video on FINEOS was the March quarter results for financial year 23 that they released in April, so about 2 months ago. And that'll become clear. You'll understand why I had to do a video on FINEOS when we see those results. But before we have a look at those, or that Appendix 4C, let's go back 15 months just to see how this company was performing the last time I did a video on FINEOS. Now, because this is an Irish-based company, they report in euros. So make sure you understand that. Receipts to customers, 34 million euros. And the company was operating cash flow positive by 663,000. But keep in the back of your mind also, this company spends a fair bit of money on intellectual property, $5.4 million in this particular quarter. And intellectual property is the capitalization of research and development. And this company does spend a lot of money on research and development. So even though they were operating cash flow positive by $660,000, the company was actually free cash flow negative by about $5 million. So they were burning through a fair amount of cash, but they still had $48.6 million of cash at the end of this particular quarter. Okay, so let's have a look at the March quarter Appendix 4C. Why I just had to do a video on this company, because this is an impressive Appendix 4C. Now, it's only one quarter. And the reason I say that will become clear when we look at the cash receipts history for this company. But receipts to customers up to 44.2 million. That's an increase of $9.7 million from the December quarter, or 15 months ago. And the company, more importantly, was operating cash flow positive by $14.7 million. And this is one of the reasons why the market is excited about this company, because they did generate a lot of cash flow in operations in this one quarter. So if they can keep doing this sort of performance over a 4-quarter period, this company would be operating cash flow positive by almost $60 million. But I don't think you can quite do that. I don't think you can sort of extrapolate this 1 quarter results over a 1-year period. And that become clear, or should become clear, when you look at the year to date. So even though receipts to customers, $106.9 million, the company was only operating cash flow positive by $12.4 million. So the first 6 months of the year, this company was actually operating cash flow negative. But because they had a really good quarter, cash on hand grew $7 million. So they still spent $6.5 million on intellectual property. But because of that operating cash flow, that cash on hand did grow. And it seems like they're keeping a lid on their spending. So even though staff costs were up $800,000, administration costs down $1 million, and product manufacturing operating costs down $2.1 million. Now let's have a look at the receipts history for FINEOS. And the main thing I'm wanting to see here is receipts growing through time. We don't need to see receipts grow from one quarter to the next. In fact, there's been quite a few quarters here where receipts were lower than the previous quarter, but over time, receipts are growing. In fact, they grew $17 million from the December quarter. So just keep that in the back of your mind, that this was a really good quarter for the company, a record quarter in terms of receipts. And it wouldn't be surprising to see receipts drop in the next quarter, the June quarter, for financial year 23. But the trend is in the right direction. And not only is the trend in receipts and revenue in the right direction, the company is operating cash flow positive. And based off some of their commentary in other announcements, they are forecasting to be free cash flow positive for financial year 24. In fact, I just had a look at one of the announcements released June 19th, and they expect to be free cash flow positive, or plan to be free cash flow positive for the second half of financial year 24. Now onto the charts. So I'm going to look at two charts here. The first one is the weekly chart, going back to when a company lists on the ASX. And the next slide, we'll be looking at the daily chart. So I'm looking at the long-term trend here, which is the weekly chart, and the shorter-term trend with the daily chart. And by far, the better-looking chart is the daily chart. Now, the share price right now is a little bit lower from when it did list on the ASX. So when it listed on the ASX, share price was around about $2.80. The high in the share price was around about $5 and we'll say 70 cents back in sort of the middle of 2020, just after COVID-19. In fact, you barely see that COVID-19 blip. There was 1 week where the share price dropped a lot, but the share price remained above about $2.40. And $2.40 was a really strong support level for this company. But that support level was broken in April of 2022 and then fell and kept on falling until the share price reached a low this year in March at about $1.10. Share price has rebounded quite nice after that, but has got back up to a nice little, not a particularly strong, but we'll say a moderately strong resistance level at $2.20. And you can definitely see that resistance level when we look at the daily chart, why the share price around about $2.20, why the share price right now is struggling to get higher. It's at a resistance level because that was the old highs we saw back in February of this year before we saw the share price take a massive plunge. There must be a reason behind that, but not a lot of volume when it did plunge, just no buying. Now, why that is a resistance level, just look at the amount of time the finished share price stayed between about $2.10 and $2.20. So there would be a lot of shareholders who bought during that period, who then saw the share price take an absolute plunge and just thought to themselves, this is a dog stock, I just need to get out. So they see the share price get back up to where they bought in February of this year, and they're thinking, now is my opportunity to sell out of this dog stock, even though the share price has moved into an uptrend. So that is supply of shares. And to meet that supply of shares, we need demand. And the good thing is what we're seeing over the last 6 or 7 trading days is that supply of shares is being met by demand. And that's why the share price is going sideways. We haven't seen a decrease in the share price of this company. And that means there's a little bit of strength here. What I'd like to see is the share price get above $2.30. Move past the highs we saw back in February. That would be a good sign moving forward. And a sign that supply of shares from those shareholders who bought in the FINEOS back in, say, January, February of this year, they've now sold out their shares. And that means there's less resistance moving forward for FINEOS. And that's all I have for my second look at FINEOS. If you have any questions, any thought, leave those in the comment section of this video. I'd love to hear it. Love to hear what you think about this company. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.